I, like many of you, use Google products every day. I use Google Search all the time. I use Google Maps to get around. I wrote this script on Google Docs. I use my Google Pixel phone here. And of course, like all of you, watch YouTube videos. So what's it all worth? What makes Google a trillion-dollar company? And what would happen to the shares if the company was broken up? Well, let's find out. Now, I understand that Alphabet is actually the parent company. It will always be Google to me, and that's how I'm going to refer to it in this video. Google's made up of a few business lines that are major winners and a few that are major losers. Or should I say, business lines that aren't making money just yet. Google breaks out the revenue into three major categories. They are Google Services, Google Cloud, and Other Bets. I'll first give a quick overview of each, and then we'll get into the valuation afterwards. The main driver here is Google Search, which actually has an 85% market share of the global search market. The next largest contributor to Google Services is this, YouTube. The other smaller divisions of Google Services are Google Play, which is an Android app store, Fitbit, which is a wearable device company, and on a side note, actually Google bought Fitbit in November of 2019 and the deal just closed in January of 2021. Next, we have the Nest products like the Nest thermostat, among several others, and the Pixel devices like the phone, the notebooks, and other smart speakers. I'm sure I've missed several other products they have in the Google services, but these are the products they break out on their 10Q and 10Ks. Next is Google Cloud. This is really similar to Amazon's AWS and Microsoft's Azure. For those that aren't familiar with this business line, they include products like data analytics, databases, developer tools, Internet of Things, artificial intelligence, data storage, and many, many more. While I think most of you are probably well aware that AWS and Azure are major money winners for their two respective companies, Google Cloud is actually a major money loser at the moment. This is because Google gives away a massive amount of credits to help draw in new customers in hopes that once these credits run out, the customers already have their data with Google and will stick around and continue to pay for the service. Finally, we have Other Bets. This is certainly a fun category, but actually quite hard to research, as Google doesn't put out much information about the companies, and they don't really mention them on their quarterly reports either. But this is where they house their moonshots and give them room to grow. These business lines include Waymo, the autonomous car company, Google Ventures, which is a VC company, Deepmind, which is an AI company, Calico, which is a medical company that is trying to cure aging, among many others. Currently, most of the revenue from this division is from the sale of internet services, as well as licensing and R&D services. So, to make a long story short, that is a ton of businesses and products. I'm sure I missed something out there too, so please feel free to leave a comment down below and let me know what other major business line I missed. And although I may have missed a product or two, it's probably kind of within the Google Services revenue, which I'll get to later. So what's it all worth? Let's start at the top with Google Search. Search brought in an insane $104 billion in 2020 alone. What's even more amazing is that Google actually continued to grow this revenue stream even during 2020 with everything going on. In Q1 of 2020, Google Search brought in an amazing $31.9 billion, which is a 33% increase over Q1 of 2020. Google unfortunately does not break out the operating income for each of these smaller business lines like Google Search. They only keep it at the higher level of Google Services. So we're going to have to make an educated guess as to the margins for this business. Operating margins were 30% in Q1 of 2020 and 28% in Q1 of 2021. So we'll use a number about in the middle and estimate 35%. Additionally, for our calculations, we're going to assume that net margins for this business after taxes and interest expenses are going to be 28%. And we'll conservatively use a PEG ratio, price to earnings to growth, of 1.0. So we'll take our growth rate of 30, times that by the $104 billion, times that by the 28% net margins to come up with a value of Google Search of $874 billion. Next up, let's value YouTube. Again, we don't have net margins here, but we can use a total revenue for 2020 of $19.8 billion, and we can use our best estimate for what the net profits are going to be on this business line. Here for our net margins, we're going to use a slight decline over Google Search and estimate that margins are 25%. This has a phenomenal growth rate of 49% when we look at Q1 of 2020 and Q1 of 2021. If we again assume a price to earnings to growth ratio of 1.0, which we will with the rest of our calculations, this will give us a total value of YouTube at $243 billion. This value is actually currently higher than the market cap of Netflix. And just as a quick comparison here too, Netflix in 2020 had $25 billion worth of sales, and YouTube had about $20 billion in sales. For those of you that are surprised that I estimate YouTube's value to be higher than Netflix's, I'll get into a full video about Netflix later on, and I'll touch on briefly here while I believe the business model of YouTube is actually better than the business model of Netflix. So YouTube creates this platform that anybody can post videos to. If you're popular enough, you get to post ads in your video and you take a portion of that revenue. So YouTube is incentivizing creators to come to their platform and post good content to draw more eyeballs. Netflix, on the other hand, has to pay for content upfront, hoping that it is a blockbuster. And even if it is a blockbuster, how much additional revenue does Netflix actually get? If every single person on Netflix watched a movie, they don't get a single dollar extra of revenue. Versus on YouTube, if YouTube gets 1,000 views versus 1,000,000 views on a video, Google makes more money. Additionally, the price of content for Netflix is going up and up. They're now competing against Apple, Amazon, AT&T, Disney, among many others. Who do you think has the deepest pockets of all those people? It's not Netflix. The next subcategory under Google services is called the Google Network. This revenue consists of properties participating in AdMob, AdSense, and Google Ad Manager. For the year of 2020, this business brought in $23 billion. We'll again use Q1 of 2021 and Q1 of 2020 as our growth comparison. This gives us a 30% growth rate. If we again assume net margins of 25%, this gives us a total value of $172.5 billion. The final group under Google services is called Google Other on their 10K and 10Q reports. This division had revenues of $21.4 billion in 2020. This segment contains lower margin items like the Google Pixel Phone, Google Pixel Book, the Google Nest Home products, along with Google Play, YouTube Premium, and YouTube TV. I want to take a second here to appreciate how large Google is. Their Google Other category under one of their other divisions of Google services had more revenue than McDonald's and nearly as much as Visa. This business grew at 46% from Q1 of 2020 to Q1 of 2021. All in all, we'll assume net margins here are 20%. And again, using our same equation here, we get a value of $199.6 billion. For a quick recap here, if we add up all of the Google services we just talked about, we get a value of $1.49 trillion. Now we'll move on to Google Cloud, where we need to do an extra little bit of legwork to come with a reasonable valuation. Google Cloud in 2020 brought in $13.1 billion, but had an operating income of a negative $5.6 billion. Again, this is because they were giving away so many credits to different companies to help draw them into their service. Now, while I don't think this is going to be a winner-take-all industry, I don't want to assume that Google's going to have the same margins as Amazon and Microsoft, who are both crushing it right now in the cloud. But they are actually reasonable estimates for where this business line could go. Amazon has an operating margin of 30% and is growing at 30% a year. Microsoft's Azure has about a 43% operating margin and is growing at 22% a year. For Google here, we'll assume operating margins of about 30%, net margins of 25%, and we use a growth rate of about 30% because it is smaller and should continue to grow pretty fast. All in all, this would value the business at $98 billion. There are some major caveats to this analysis here. This division is currently hemorrhaging money big time. And as I said, this strategy is all about just getting people on the platform. However, if customers are easily able to migrate to different cloud services, they might leave just as soon as the deals are gone and go find the next best deal. This could eventually push down margins within this business among all the major players. But for now, all these business lines are growing pretty fast, pretty steadily every single year, so I think it's a pretty reasonable estimate. Alright, finally we get to the other bets category. We'll just pick their top businesses and try to come up with some reasonable valuations. Also, to save time here, I'm not going to go into great detail on each business lines, as each business could actually probably be their own video. If you're interested to learn more about these businesses, I'll post some links in the description box below, and I might make a video about one down the road. Let's first talk about probably the most well-known, which is Waymo. Waymo is an autonomous driving service that is currently driving an autonomous public ride-hailing service in Phoenix at a rate of hundreds of rides per week, according to a recent earnings transcript. They even went on to say that in San Francisco, Waymo has begun limited employee testing. The market opportunity here is massive. The two leading companies in this division are Uber and Lyft, and valued at a total of $100 billion. Waymo was previously valued at $200 billion, but recently raised money at a valuation of just $30 billion. They still have a lot to prove, but this could be a massive company. Now, I know many of you are probably familiar with Elon Musk when he says you need to solve vision to solve autonomous driving, but I think he's trying to solve fully autonomous driving where there's not even a steering wheel involved and you can kind of go anywhere, anytime. Waymo, on the other hand, as I understand it, is looking to be more of a ride-hailing network within major cities, maybe a courier between different sections of a city, and not necessarily the fully autonomous drive across the country, do anything anywhere that Tesla's trying to be. So there could be market for both. Deepmind is the next topic here. Google bought this AI company in 2014 for £400 million. Deepmind is responsible for some pretty amazing AI products, and most of these public ones include AlphaGo, AlphaGo Zero, and AlphaZero. For those of you that aren't familiar, there's a very popular chess software called Stockfish. Stockfish was previously the best computer playing chess. However, in just less than 1 day of self-play, AlphaZero was able to beat Stockfish. Deepmind has also created AlphaStar, which is an AI that can play StarCraft 2. In addition to some of these flashier, public-facing game-playing AIs, they've also created AlphaFold. AlphaFold is attempting to tackle one of the most complicated problems in science, which is protein folding. Now this topic is way too complicated for me, so I'm going to leave a link down below in the description box to help explain it for anybody that wants to learn more. Now with all that said, Deepmind is valued at about $20 to $30 billion today. Next, let's shift to Google Ventures. Now known as GV, focuses on early stage investing, and Capital G, which is Google's private equity firm, focusing on late stage investing. These organizations within Google are probably some of the best to partner with because of their massive reach and scale. Imagine being the owner of a startup and 2 different investors come to you. One is Google. They can provide access to not only a massive amount of capital, but access to some of the smartest minds in a range of industries across the globe. The other is just a deep-pocketed investor who can provide some guidance. Which one are you likely to choose? And actually, one quote from an employee from CrowdStrike who worked with Capital G says it all. He said, "Working with Capital G has been a great partnership. We launched our first inside sales team from their office, and they delivered many introductions to customers, as well as access to expertise within Google when we needed it." Now for the value of these 2 businesses, we're going to use their assets under management, as this should approximately take into account the value of their investments in other businesses. GV has $5 billion under management, and Capital G has $3 billion under management. Now I'm leaving off the value of Google Fiber here, as they haven't done much with this business in the last few years. It launched its first service in Kansas in 2013. It expanded to roughly a dozen areas, mostly from 2013 to 2017, but since then has been growing really slowly. It is estimated that it takes about $1 billion to add fiber to a major city, but Google's only making about a couple $100 million from existing customers. This means that they need to tap into the deep pockets of Google, or go back to the private markets to raise some more capital if they want to continue to expand. Additionally, I left off Calico and Verily. These companies have a mission to increase lifespan and create products in the healthcare space. After quite a bit of research, I couldn't even really figure out if either of them were close to significant sales. So for that reason, I'll just leave these on here as a kicker. If they are successful, great. If not, oh well. Both companies have had some pretty major partnerships along the way, but neither one has had significant revenue to date. So for that, I'm going to leave them off the valuation list here, and it'll be a nice kicker if either one of them pan out. So for the running total here, we have Google Services at $1.49 trillion, Google Cloud at $98 billion, and Google Other Bets at $60 billion, with a nice kicker that if one of them takes off, it could be worth significantly more than that. This gives us a valuation of all of Google's businesses at $1.65 trillion. And if we add in the $135 billion of cash they have on their balance sheet, that gets us to a total value of all of Google of $1.758 trillion. As always, all of my assumptions in the description box below. Please feel free to modify these numbers and come up with your own estimate for what the value of Google is, and let me know in the comments down below. Well, that's all I have for you guys this week. I hope you enjoyed this week's video. If you did, please leave a like. Don't forget to subscribe for more content, and I'll see y'all next time.